Good morning. Welcome to Stock Market Today. It's Tuesday, October 13th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the great content for this show. Also give you daily stock ideas to consider. And that hits your inbox every trading day before the market opens. So U.S. equities higher on Monday, though off the best levels of the day. Tech was the best sector, led by the mega caps. Materials was the only decliner at the sector level. Energy and industrials were also underperformers. Treasury market was closed for the Columbus Day holiday. The dollar was weaker against the yen, but better against the euro. Gold was down 10 basis points. Crude oil down about 3%. And back below $40 a barrel after rallying 10% last week. As we get to the desk this morning, it's a mixed bag in the futures market. S&P futures down about 10 basis points, but NASDAQ futures are higher by about 70 basis points. That's after Asian markets were mixed overnight and European markets are trading lower. Treasuries are stronger. The dollar is stronger on the major crosses. Gold is down 10 basis points. Crude oil is rebounding a bit, up 1.8% to kick us off on a Tuesday morning. That starts out with some follow through after across the board breakouts for equity markets in the U.S., whether we're looking at the SPY, the Qs, or the IWM. They've all broken topside from consolidations. Now SPY and Qs are putting their September highs in play. And IWM, though it lagged yesterday, is putting its highs from earlier this year in play. You can tell that IWM still has not recaptured pre-COVID highs. So that is in play, right? So we had some follow through, but it lagged the big cap move yesterday. Qs at a massive day, at one point up over 4%, and that prompted some questions as Softbank reloading. Saw some articles about options activity, remember, back at the end of August. A lot of people kind of unearthed the fact that Softbank was buying these options in these big cap tech stocks, and that was driving stocks higher as dealers had to reposition and re-hedge. Maybe, maybe not. The simple fact of the matter is it's happening. So if you're looking for a reason, that's as good a reason as any as far as I'm concerned, right? So for the SPY, I think we're playing for the September highs leading up to the election. So across the board breakouts, that is bullish, obviously. We're gonna have to watch what happens as we get to the highs. The highs are in play. They're obviously going to be challenged, and we'll take a look at how it plays out once we get there. Let's look at our market in a minute. Tech and comms lead a big Monday rally. So again, going back to August and the names that were really powering the market higher. I mean, just indiscriminately going higher, those big cap tech and comm services names. Same thing played out yesterday, which is why some people are asking if the big options whale, Softbank, is back in the market. Recent relative strength in utilities prompts some questions. You've heard me talk about that a little bit. I'm just trying to get a handle on why utilities are performing the way they are in the near term. Right? A lot of people, and I think it's interesting because I think there's potential there for the traditional fallback, lazy argument of, utilities are defensive, so maybe there's some problems under the surface. I don't think you can immediately go there just given what we're seeing in the across the board breakouts, in the breadth that we're seeing, in the types of other areas of the market that are leading. I don't think you can just lazily fall back on utilities are leading, so I'm going to get defensive. I think that there's work to be done, right? Pay attention to what's happening in the treasury market where their yields are paltry and treasuries have come under pressure. Could it be that treasury investors are rotating into utilities? It could be. Let's not be lazy, though. Do the work. Go see the connections. Figure out what's happening. That's always my mantra, and that's what I'll be doing here. So that's prompted some questions. I'm going to go hunting for answers. I may find them, I may not. But the simple fact of the matter is utilities are perking up on a relative basis. All eyes are on the banks as earnings season begins, and we are seeing signs of a relative bottom in the financials. So that is kind of interesting to me. And as I said, futures point to a mixed open here this morning with the spiders or SPX down, but NASDAQ up. Take a look at yesterday's performance. The Dow up 87 basis points, and that was interesting. However, 4-2 bulls to bears, not a ton of change there. S&P 500 up 1.6%, 136 to 54, solid performance there. Look at this NASDAQ up 3%. It was up over 4% at one point yesterday. 35 to 3 bulls to bears on the NASDAQ. From a ratio standpoint, that's one of the stronger ratios that I've seen. in a long time. Small caps, big underperformers on the day. But still a solid power bar, 791 to 212. Bonds uptick, sending yields lower. Tech was your big outperformer. There it is. Up 2.73%, 26 to 3, bulls to bears for the information technology ETF, ticker symbol XLK. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Let's hit our stocks of the day, plural. Earnings season kicks off with the big banks. Saw JP Morgan come in and beat numbers. Want to see how the stock is trading. Haven't had a real chance to look at it yet. Did notice, though, that their loan loss reserves were lower, a lot lower than the street expected. So that is kind of interesting here in the quarter. Going to have to parse that and see how JP Morgan trades today. But what I wanted to do was screen for what I call earnings leaders. So I took the Russell 3000 as a starting universe, and I looked for stocks that are bullish or very bullish in our model. And then I went down to the factor level. I don't always go to the factor level, but since we're screening on a specific event, i.e. earnings, I wanted to screen on earnings-related factors. So I looked at factor growth, earnings growth, earnings trend, and earnings consistency. I wanted all of those to be bullish. And then, as always, from the technical side of the board, I wanted strong money flow and strong relative strength. What do I get? I get 35 stocks that are interesting as we head into earnings here. You know, some of them are off quarter, right? So don't just blindly go into these names. And you notice I didn't put kind of a trigger here. I didn't look for oversold or anything like that. So some of these might not be meaningfully actionable in the near term, but this is certainly a list of names that you want to be paying attention to, right? And you can see a lot of the builders on there: DHI, MHO, right? Software. Take a look at Adobe, apps, Salesforce, right? PayPal, big name within some of the themes that we've been talking about. Home Depot and Lowe's plays on the builders, right? So this is a really interesting screen that I've run here. I would urge you to screenshot this or come back to the show at some point. Some 35 names here that look interesting if you're doing work into earnings season, right? And I mean doing work. Right? Not just being told, hey, this looks good, Adobe looks good, like doing the work. Like put this on a list and go read up on why Adobe looks good heading into earnings. Try to get a sense if that's going to continue. Have an understanding of what's driving things here. Why was Amazon up yesterday? Was it Prime Day? I don't know. Maybe a big part of it, but Prime Day has been on the calendar for a while. So, it's easy to kind of fall back on some of these things. But it's interesting to say do the work and look at these here. Let's look at the major sectors now. Movement, our sector tracker. Tech gets to the top of the list. We love seeing tech at the top of the list. Why? Because, well, it's the biggest weight in the S&P 500. There's your utilities in the number 2 slot, which prompts my questions. Maybe I'll get some answers. Maybe I won't. Discretionary is a group that we like. The fins are interesting, right? It's been a long time since I've had anything good to say about the fins, but I am paying attention here now. I'm seeing signs of a potential relative bottom in the financials. And now we have a catalyst in the form of bank earnings this week. That's interesting to me. I want to take a look at that. Comms, staples, materials, and industrials in the middle of the road, healthcare, energy, and REITs lower, or lagging rather, nothing lower over the past 5 days. So solid performance from a sector level over the past 5 days. But remember, it's not enough to be up. You have to be up more than the market in order for me to deem you successful. At least that's how I look at myself, right? So owning real estate, great, real estate's up. That's nice. But, 1.3%, the market was up over 3% last week. So don't tell me that you had a good week because you didn't. But if you own tech, you had a good week, right? If you own discretionary, if you own comms, the areas of the market that we've liked. So just kind of keep that in mind. Taking a look at our industry in focus now. Speaking of tech, NYSE Tech Services, XNTK, the ticker symbol there, and a monster outperformer over the past 6 months. 25.25% to the good relative to the S&P 500. Very strong power bar ratio. 19-0 bulls to bears. 19-0 is not even in the top sector. That's interesting. Currently ranked number 2 of 21 subsectors. Names we care about here: AMAT, JD, and VMware, all with very bullish Chaikin power gauge ratings. For a fund that there's no two ways about it. That looks outstanding. There's nothing not to like there other than in the near term, it's overbought. Bullish rating above a rising long-term trend line, 19-0. Strong fund, strong trend, strong money flow, strong outperformance. This is it, folks. This is what you're looking for. We've been bullish tech for a long time. We've stayed with tech through this little hiccup here. Those of you who read my notes know my feelings on these areas of the market. So look at the spike in money flow as well. So let's look for this group to test the highs, and then we'll reevaluate. But XNTK is certainly an area of the market where I want to go looking for long ideas, and there are 19 potential bullish or very bullish stocks for you to look at. Let's take a look at what's trending now. Yesterday's movers and shakers. Apple, monster move, 6%. Think about that. Just step back and think about that. Apple's market cap, and it adds 6% in a day, right? And I mean, people are going to point to the fact that they have an event today where they're going to unveil new phones. That event's been on the calendar. Let's start there, okay? Number one. Number two is, while the new phones are interesting and they could drive a refresh cycle, phones are not the key driver of the Apple story, in my opinion, right? They're obviously important. They'll always be important. The phone is the gateway that gets you into the ecosystem. But more and more, the ecosystem at Apple is what's driving the story, in my view. So this move, this is why I lean more towards, was SoftBank back in the market? Look at Twitter. Twitter did catch an upgrade. So some justification there. Ford caught an upgrade as well. I find it hard to believe that SoftBank's buying Ford, but maybe they are. Amazon, Prime Day kicks off today, but again, that's been on the calendar. So, the lazy argument is to say, well, Apple's having a product launch and Amazon's having a Prime Day, but I don't, those have been on the calendar. Maybe they contribute, but those are not the rationale, in my opinion. IDXX, some positive comments out of BAML, Bank of America, Merrill Lynch, continuing to drive that stock higher. Loser side of the board, not a ton of news, other than Carnival Cruise Lines, which canceled some more cruises. That probably impacted Norwegian. APA down. CF, kind of interesting to see that down as well, but no real company-specific news here. But Monster Tape, and these names are down, so you want to sit up and take notice, right? Just like we like to look at who held up well when the market was weak. You get a lot of information by seeing who was down 3 to 5% when the market was as strong as it was yesterday. All right, so I said it, I'm intrigued. Here's the financials. Top of the chart, financials relative to the SPY, XLF relative to SPY. I mean, it's ugly, right? If I just showed you this chart, you'd probably look at me and say, Dan, why are you intrigued? Well, the reason I'm intrigued is there are signs of a bottoming process playing out. And what I mean by that is, you had the initial sell-off here into COVID. You had massively oversold positions, RSI for the ratio. And now we've continued to head lower, and the RSI has stayed in bearish ranges. But we notice the last few trips lower, we're making higher lows and not becoming oversold. All right. That tells me at the very least that downside momentum could be waning. Okay. We actually have a higher low here for the first time in a while. So that intrigues me. But it doesn't just intrigue me by itself. I need a catalyst. I need something in the story that gets me to sit up and take notice and say, hey, if this plays out, this bottoming process starts to become even more compelling. And that story is earnings season, right? We have earnings season kicking off. JP Morgan just reported. All right, we're going to hear from the big banks. So we have a potential catalyst here. This is not Dan's bullish on financials. This is Dan seeing something here where there could be a shift taking place. So I'm going to pay attention to it. And if the shift plays out, then I can have conviction that there's a new trend developing. Right? It's not about calling the bottom. It's about sitting up and taking notice to subtle changes on the margin. Take a look at the banks breaking the downtrend, KBE. Breaking this near-term downtrend from 2020. Banks have been a mess. There's no two ways about it, but look at that downtrend break. So now I want to sit up and take notice. I'm not intrigued in energy, right? Completely different story here in energy, right? Traded at a new relative low last week, no signs of a bottom. Series of lower highs for the RSI, can still becoming oversold, right? So different story. Now, a lot of people have been trying to call the bottom in energy. I'm just not there yet, especially with crude oil unable to break meaningfully above the $40 mark. So maybe energy will turn. Maybe I'm dead wrong. Maybe this is the place to go bottom fishing and financials continue to bleed out. But based on what I'm seeing here, I would rather spend my time looking at the financials and paying attention, especially because they're going to be front and center this week, than kind of tossing a coin and saying, well, sentiment's bad on energy, so I'm going to buy energy. It makes no sense to me. That trend doesn't show signs of reversing where there's potential for a reversal in the fins, right? Quickly to wrap it up, that breakout in utilities is interesting. Let's wrap it there. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.